Don't Count on It. Reflections on Investment Illusions, Capitalism, Mutual Funds, Indexing, Entrepreneurship, Idealism, and Heroes. Written by John C. Bogle. Narrated by Mel Foster. Publisher's note: this book will periodically reference charts and tables. To view these materials, refer to the PDF companion to this audiobook. Foreword. Did someone say, "Don't count on it," or was it, "Don't count on them"? As everybody knows, America's vaunted financial system let us down big time during the raucous decade of the 2000s. The decade began with the spectacular stock market crash of 2000 to 2002, as corporate will-o'-the-wisps, previously hyped by unscrupulous analysts who should have known and did know better, collapsed before our eyes. That searing financial shock was followed in close order by the accounting scandals at Enron, WorldCom, and others in 2001 to 2002, the mutual fund scandals in 2003, and then, of course, the mother of all financial collapses, the stunning series of financial crises that started in the summer of 2007 and eventually brought the entire financial system to the brink of ruin and the world economy to its knees. With all this going on, you might have thought that America's leaders, both political and financial, would have been frequently out on the hustings, giving both detailed explanations and copious apologies. But you would have been wrong. The silence has been deafening. Enter Jack Bogle, the conscience of Wall Street, if that's not an oxymoron. More accurately, Bogle never left. His relentless voice, sharp pen, and indefatigable energy have been prodding the mutual fund industry in particular, and the financial industry more generally, to embrace higher business, fiduciary, and ethical standards for decades. Indeed, the essay that lends its name to this volume originated as a speech at Princeton University, Bogle's alma mater and mine, in 2002, and a few of the others are older than that. Our financial leaders and public officials had plenty of time to set things straight. Would that they had listened to Bogle more, but too often his was a lonely voice in the wilderness. That fine voice is in ample evidence here, in this worthy collection of 35 essays, many of them short and pithy. The essays range widely over the usual Bogle themes: the unconscionably high costs of financial intermediation, the disgraceful failure to abide by what should have been normal fiduciary standards, the inefficient absorption of too much high-priced talent into financial manipulation rather than into useful productive activities, the dismaying triumph of emotion over cool-headed reason in so many investment decisions, and the related and sometimes ruinous triumph of speculation over investment. If you've heard these themes expounded by Bogle before, listen again, because the lessons still haven't sunk in. If you haven't, you're in for a real treat, for Bogle writes not only with passion and conviction, but also with verve, wit, and literary flair. Where else in a book on finance will you find references to, in chronological order, Horace, Benjamin Franklin, Edgar Allan Poe, and Stephen Colbert? As a veteran of the mutual fund industry and a father of low-cost index funds, it is no surprise that Bogle directs much of his ire at the high costs of financial intermediation. He never tires of reminding investors of this fundamental identity. Net returns to investors equals gross returns on the assets minus costs of operating the financial system. The identity implies, among other things, that an investment advisor or broker or mutual fund manager earns his keep only if the gross returns he adds by beating the market exceed the costs he subtracts. Armed with reams of evidence to the contrary, Bogle is skeptical that this happens often. In Chapter 4, for example, he estimates that, in 2007, the costs of intermediation in securities came to a staggering $528 billion. That was 3.8% of GDP.
Sample complete. Ready to continue?